Welcome, ladies and gentlemen, here Commodity TV for you in Zurich at the Zurich Invest offices, and we have our little studio here. And with me here is now, for my honor and pleasure, really Sean Boyd, the CEO of Agnico Eagle, one of the most successful mining companies in the world. And we want to get an update, of course. Sean, welcome.
Nice to be here.
Yeah, great to have you. Thank you very much for taking the time, as I know your schedule is always very full. So let's dive directly into your lovely company. You celebrated the 60th birthday, not you personally, of course, but the company.
I'm almost there.
Almost there. Well, we don't see that. But you celebrate the 60th birthday last year with your company. I mean, that's really outstanding performance. Yeah, and I would say you are one of the guys who is really mainly responsible for the success of the company. So how was 2017 for you?
It was a record year. It was a record year, not just from a production of gold standpoint, but also we saw our reserves increase. But I think most importantly, to produce that record production, we had the most man hours worked in our history, combined with the fewest lost time accidents. So that's a record safety performance. So I think that's a measure of the mindset of our employees coming to work to make a difference, look after each other, and to be productive, because not only are we increasing production, but our costs have been trending down as well.
Absolutely. And I mean, the workers feel not only safe, they feel also good, because they see that you are taking care of them.
Absolutely.
Yeah. Perfect. So costs have come down. You said it already. What was the cost situation? I think you beat one more time your guidance, right?
Well, it was the 6th consecutive year that we beat our production guidance and our cost guidance. And the nice thing about our growth as we move forward is we're in that transition year this year in 2018, where we wind down our production at our Meadowbank deposit around the Meadowbank processing facility. And we're transitioning that production base in Nunavut into two new sources of production. The Amaruq deposit, which is 60 kilometers north of Meadowbank, we'll be shipping that material directly into the Meadowbank processing facility, but also the new Meliadine project, which is expected to start in the second quarter of 2019. What that does is that drives our production up to 2 million ounces by 2020. And with those additional ounces, our unit costs come down. A lot of that production growth is really driven off of better grades being introduced into the mining plan. We've been mining below reserve grade for the last 5 years, so that thing tends to balance out over time, and there's the new deposits that are coming on stream are higher grade, so that helps us manage costs.
Okay, perfect. So what is your, let's say, guidance or prediction for the all-in sustaining costs for 2018 or also 2019 maybe then already?
Yeah, for 2018, we expect it to rise a little from last year, strictly because the production's down a little bit in 2018 from 2017 as we transition in Nunavut. So our estimate is a little over $900, but that will trend down to $850 as we move into 2020. Cash costs should be in the sort of $600 range in 2020. So good margins as we grow output. And what that does for us, as we look out till 2020, we see rising cash generated in the business through being able to manage costs and increase output. At the same time, our capital expenditure requirements come down significantly. We peak this year at $1.1 billion. We'll be dropping to the neighborhood of $650 million or so next year. So we've got roughly a $400+ million drop in capital being spent in the business next year at the same time as production starts to rise. So we're going to see rising net free cash flow in the business, which gives us a lot of options. One, increase the dividend. We've paid a dividend for 35 years. We'll reduce some debt. So it really introduces a lot of financial flexibility into the business.
Fantastic. Can you maybe comment a little bit more? Let's say that the last dividend I saw was, I think, 11 cents.
11 cents a quarter.
For the quarter, right?
Yes.
What might be the intention or formula for the future dividends?
There's no formula. The plan has always been to pay one. We've paid one for 35 years in a really volatile commodity business. Yeah. And that's through, running a solid business. So what I can say is that the gross dividend is $100 million a year. Based on the numbers we talked about, requirement to spend less capital on growth projects. We're still going to grow the business, but we don't have big projects like Meliadine in the pipeline. We've got modest, high return, incremental expansion opportunities. So less capital in the business with more profit being generated at the mines to the tune of several hundreds of millions of dollars. Given that the dividend's only $100 million, we could easily increase that and be very comfortable doing it financially.
Yeah, fantastic, great. Let's come to the debt situation in the company. What is the debt to EBITDA, for example, and how much do you think you can pay back?
Well, we have a debt repayment on our debt schedule of $360 million in 2020. Given our production ramp up and the cash generated from the business, that's no issue. And we've termed the debt out over 15 years. In fact, we just did 2 acquisitions in the last 6 months. One is we bought the other half of the Kirkland Lake property package that was held in the partnership with Yamana. We bought Yamana's interest. We now own 100%. And we also bought a property in Mexico for $80 million. We funded that with some debt. We just did $350 million in long-term debt. Of that, $250 million was 15-year debt. So we've got investors that are willing to take out 15-year money at roughly 4.6%.
Oh, that's quite cheap.
So very good. The demand was 4 times what we decided to do. We're investment grade, and that's really, I think, one of the big things over our 60-year history, why we find ourselves in a really strong position to continue to grow production reserves, is because we've invested long-term, we've invested consistently, we haven't really adjusted our investment based on the commodity cycles, but we've also managed financial risk, and we've never put ourselves in a position where we're going to end up with a financial issue, because if you manage financial risk, you can take geological risk, and that's where we've had our big wins. We've bought things early, and they've grown dramatically in size.
Yeah, and I think also you always stepped into the right jurisdictions.
That's by design. The way we see it now is that we're after a different investor right now. We all, as gold companies and resource companies, generally chase the same investors. The quality of this business allows us to reach beyond that investor universe, and we're targeting generalists now. And the generalists, if they look at the gold space, they come at it from the perspective of, I don't have to own a gold stock. We're just trying to convince them that we have a good underlying solid business that we can grow that just happens to be a gold mining business. And you need a story that manages risks and is perceived by a generalist investor to have a low risk profile.
Absolutely. And I think also the precious metals area is not yet part of the everything bubble, right?
It's not. And so I think what we're seeing in the last year is we get out and talk to a lot of investors, and our IR program's award-winning in Canada. We only have 2 people, and it does an exceptional job getting out there and telling the story. So what we're seeing as we get out there is that we have no shortage of interest in meetings. And these are broad-ranging meetings with generalist type investors around the world. And you don't get the sense they're buying into the gold story yet, but they're clearly doing the homework for the expectation that at some point they'll find themselves owning gold stocks. And we want to be the one that they choose and the first on their list. And that's why we're out there knocking on doors.
Absolutely. I want to ask you something maybe, different to what you maybe normally ask, but we saw a lot of share buybacks in the US, even on credit. Is a share buyback program something to, let's say, enhance shareholder value or to make shareholders happy for you in the future?
I think it may make sense. I think Newmont's put one forward to essentially buy back stock that gets issued under their long-term compensation plan. I think that's something we would look at, given that we're going to see significant production and cash flow growth next year as we ramp up the Nunavut platform and expand our other mines. That's something, in addition to the dividend and repaying some debt, we'd certainly look at buying some of the long-term compensation, the shares that gets issued on that.
Yeah, fantastic. Something else I wanted to ask you is really about the markets. Where do you see, let's say, gold and silver these days? We were just talking about before this interview, and I said, well, it looks to me like the perfect storm is set up. Yeah, we have rising debt levels in the world, even the highest debt levels ever in the world we have. We have a lot of black swans occurring here, North Korea, Trump, whatever, you name it, Also, we saw JP Morgan having 140 million ounces of silver all of a sudden and stepping out of the COMEX. So what is your view on the market? I mean, gold and silver should be much higher, right?
Yeah, but gold's still done well, and silver will follow, and that's traditionally how it works. And from our perspective, we look at gold. It's struggled several times over the last 2 years to get through 1375, but it's very close. And I think the fact that it's 1340, 1350 in the face of Dow at 25,000 is actually a good performance. So clearly somebody's buying. But that buying hasn't rolled into the gold shares yet, or the silver shares, or the precious metal shares. So it will happen. It will come. I think you mentioned a number of reasons why there continues to be a high level of uncertainty in the financial markets. Any one of those can come to be a catalyst to see gold go through 1375. But guys have tried other options. They've tried their cryptocurrencies in Canada. They've tried the marijuana stocks, looking for a quick buck. But eventually they come back to gold. And I think that's why we've seen over the last year generalist investors, smart guys running a lot of money, doing their homework on the high quality gold names, because they expect to be here at some point, and that will happen. And I think we forget gold could easily move 10 or 15%, which would put us above 1,500. If you're above 1,500, I think that's a bit of a psychological barrier. I don't think 1,400 will be an issue once we get through 1375, and then we're heading up. 1,600 is not a stretch.
Absolutely not.
And I think the industry's done a good job getting costs in line, simplifying businesses, right-sizing businesses. They're set to take advantage of what may be an increasing gold and silver price. So now's the time to get in. There's a window now. It won't be there all, forever.
Not long.
It always makes sense. We've seen these periods before. Generally, before things start to get really interesting, they go very quiet. It's very quiet now.
Yeah, that's right. Yeah, absolutely. I see it the same way, definitely. Assuming you are generating a lot of more cash, and as you said, you need to spend much lower capital. So that leaves a lot of room for, let's say, future business. Because then you have the capital to take on other companies, other mines, whatever. Could you imagine, let's say, to move a bit away from the gold and silver focus you have, or precious metal focus, copper focus you have, let's say, to cobalt, lithium, as those are the future metals, I would call it, of mobility?
Yeah, that's a tough one to specifically say that's a metal or group of metals that we would find ourselves in. I think it's fair to say, though, that as the gold companies evolve, what we're seeing is a declining high-quality opportunity set out there, outside of our own pipeline. And everybody else will be seeing the same thing. Well, I think what that means is the mining skills are transferable. And so you can move these to base metals. You can move them to other metals. For us, it's not really what metal. It's what is the opportunity to add cash flow and net free cash flow, and what are the returns on that? Where is the asset located? In our history, we've had a significant component of base metal revenue from LaRonde. At one point, it was 50% gold and 50% other metals. So we have that experience. So we're just saying now, it's an interesting question, because we've been discussing that in our strategy sessions. And it's highly likely that at some point down the road, we find ourselves involved in another metal, but not that we're going to chase it. Not that we're going to go into a region we have no business being in because we don't understand the risk, but we're saying to our people, keep your eyes out. In the regions we're comfortable in the regions we have a dominance in terms of skills and ability to get business done, keep an eye out. Doesn't necessarily mean we'll develop it, but if we can add value and do it in a way of a partnership, make money for our shareholders, we'll do it.
Definitely. This means you're open for business, as usual.
Yeah,
great.
That's true.
Sean, thank you very much. It was a fantastic insight, and all the best. And look forward tomorrow to your, first of all, presentation, but also to the mining panel in the evening at the Doldo, which I'm moderating with you together. And we will have
a lot of fun.
I would say.
Go easy on us.
Absolutely. Thank you very much. Thank you. Yeah, ladies and gentlemen, there was Sean Boyd, the CEO of Agnico Eagle. Yeah, and you heard it. The company is, as usual, in perfect shape. Yeah, the money is flowing in. They have their costs perfectly under control, even lowering the costs and raising the production. The growth profile is fully intact, moving from 1.7 million ounces to over 2 million ounces within the next 2 years. And I would say, as usual, the company has done their homework. It's a top leader team around Sean Boyd. And they're open for business, of course, maybe also for other opportunities outside the precious metals. We will see. We keep you posted. Thanks for watching us. Bye-bye from Zurich.